All right, what's up, guys? Dividend Dummy here again. So, today we're going to be talking about the Invesco KBW High Dividend Yield Financial ETF, and the stock ticker for that is KBWD. All right, so let's talk about the ETF overview now. And I like reading this little snippet here because it kind of talks about the strategy that KBWD uses. And so KBWD seeks to provide exposure to the financial sector in the U.S. Aside from selecting stocks with competitive dividend yields, the fund also follows a modified dividend weighing methodology. This focus on high dividend stocks tilts KBWD's portfolio materially away from the broad financial market. It also excludes industry giants in favor of smaller companies offering bigger yields. It follows that KBWD tilts small. The fund's dividend centric strategy also leads to massive sector bets, as it underweighs insurance companies and loads up on REITs and private equity. The index is reconstituted and rebalanced on a quarterly basis. And so, in reading this, I really like hearing that, they try and stay away from those, big giants, right? And, they look at more of the smaller bets and say, hey, this is a stock trading at $8 to $10, but they offer an 8% yield, and that's something that's more intriguing versus you know just a stock that's been on the market now for 40 years and they offer a 1% yield and they're trading at $80. So it's an interesting strategy, but at the same time, I also like it because I think REITs and private equity is a huge play currently and in the future. All right, and let's kind of go over KBWD's portfolio real quick. This is just a screenshot here of the top kind of companies that they're invested in within this fund. And so right off the top, we can see that Armor Residential is a REIT that right off the bat they're investing almost 5% of the fund in that. And I think REITs are definitely a strong investment to begin with. Obviously, this is going to be a diversified portfolio with different private equity sectors, different asset management sectors, as well as REITs. And so some of the picks on here that I do like are obviously the REITs, the investment corps or trusts, the capital management firms or other investment corporations. A lot of them have shown success throughout history, but they've just been undervalued because they haven't gone from being worth $5 to being worth $500. They've had steady growth, but a lot of the times they have a steady dividend yield, and that's what's so attractive to a lot of these investors. All right, so now let's talk about the dividend history here real quick. Um, Again, it's another screenshot kind of showing what the past few months have looked like and then what the future looks like as well. Right now, they currently have a dividend yield of 6.77%, which is very generous. And at market close, they were trading around $18.94. But one of the big things that I do like about this ETF here is that the dividend yield is paid out monthly, and that's a pretty big thing because a lot of times most companies will pay quarterly. So 4 times a year you're going to get that dividend, but with this company it's going to be every single month, and they've been consistent payers since they first came out, and I believe 2011 or something like that. Which is again another thing that I definitely look at because you want to make sure that they've been consistent over time, and it's not something where in the past few months it's been up and down or they've just started. All right, so for the final rating here, I'd have to give KBWD a solid 7. They definitely implement a pretty unique strategy as far as going after some of the smaller REITs and private equity companies out there. And, I find that pretty intriguing. That definitely shows as far as KBWD offering almost 7% dividend yield. They've also stayed pretty consistent over the years as far as offering that monthly dividend. and being a pretty good payer in that too. And so I think that this is something to definitely keep on the radar going forward, and definitely see where it goes.